1.2 trillion or 1.2 lakh crores. That's the amount of money the government now owes to those who invested in sovereign gold bonds. With the gold prices rallying to new record highs, this bill is likely to grow bigger in size, as this amount does not include the interest due on these bonds. And if gold continues to rise, which seems more likely given the global economic scenario, this amount is calculated based on gold prices on April 1st, and if all outstanding gold bonds were redeemed now. The Modi government, in a written reply to the Parliament, has said that the outstanding value as on March 20, 2025 on issue price is 67,322 Indian rupees crore for 130 tons of gold. Redemption of SGBs is based on the prevailing market price. So far, the government has already fully redeemed 7 tranches of sovereign gold bonds, and offered to prematurely pay out the money to SGB subscribers of the 8th tranche. As some of you might remember, the government's decision to prematurely pay the subscribers has come just a couple of months after it decided to discontinue the sovereign gold bond scheme due to high borrowing cost. However, this amount is not payable all at once. This amount will be due in several chunks as each tranche will have its own maturity date. The final tranche of the SGB will be up for redemption in 2032. Sovereign gold bonds were sold in different tranches and came with a tenure of 8 years. The promise of the SGBs was that the investors will be able to redeem the investments made at prevailing gold price on the date of redemption along with periodic interest. The interest is paid to the investors semi-annually. While the interest earned on SGB is taxable, if an individual investor holds SGBs until maturity, 8 years, the capital gains on redemption are tax-free. If gold prices continue to rally like they have been, and if SGB investors plan to hold their investments till maturity, the government will have to shell out a much higher amount. Sovereign gold bonds, SGBs, were introduced in India as part of a broader strategy to reduce the country's reliance on gold imports and to monetize gold holdings. Critics say it was a bad idea to begin with. Since the issuance of the first tranche of SGB in 2015, gold prices have rallied 252%. The government had to pay out a 128% premium to SGB investors of the first tranche without interest. With interest, the premium surged to 148%. The government has issued a total of 67 tranches of sovereign gold bonds amounting to 146.96 tons of gold till 2024-25. Parliament was informed on Tuesday. The outstanding value as on March 20, 2025, on issue price is 67,322 Indian rupees crore for 130 tons of gold, Minister of State for Finance Pankaj Chaudhary said in a written reply. The government has maintained a gold reserve fund, GRF, in the public account where the price and interest differential amount is credited in time.